I'll hit that button right there. That one will do. Hey, welcome to the Closing Beat, everybody. Happy Wednesday already. God, days and months and weeks and hours are just going by so quick. Every day I lose a few more hairs. We'll talk about my hair here in just a little bit. Welcome to the Closing Beat. We are financial advisors here at Jazz Wealth. It says the shirt, so you know it's real every single day. jazzwealth.com/2023 if you want to have Haley send you an email, a little document that has 2 pages, tell you everything you want to know about 2023, your tax brackets and Roth IRA limits and RMDs and all that great stuff. Really cool. She actually put it into a little 2-pager, no strings attached. You're just welcome to have it. And also, get your guess in. jazzwealth.com/guess the Dow is up and running. If you can guess the Dow closest without going over, Price is Right style. We'll send you a $100 gift card if you're not a client. If you're a client, you can take the gift card or you can have your account credited $100 by us, and it does not count towards contributions or anything, which is pretty cool. So for 2023, if you have a Roth IRA, you're under the age of 50, you could theoretically win Guess the Dow a few times and end up with more than $6,500 in your Roth, which may come in handy considering what we saw today and could be seeing here in the stock market. The Fed did their thing. There's not really much to say about that. They did exactly what we were hoping for, or what the market was kind of hoping for. They raised a 1/4 point. They're now in the 4.75 to 5 range. That's where they're at. Predictions are somewhere closer to 5.5, top end range there for the Fed. And that current range is the highest since before I had a receding hairline. There's your hair comment for the day. I actually don't mind. It's whatever. It's part of getting older. You guys used to tease me all the time. You'd say, "Oh, you're just in your mom's basement, man," because I looked all young and stuff. And then, you beat me down and stuff. So, hey, that's what it is. Anyways, the 1/4 point hike, largely expected as of yesterday. There's an 85% chance of that happening. This morning you wake up, 91% chance. So that's what everybody was betting on. The key to it was they took away, how every Fed announcements, he reads off a statement. And in the statement, he'd say something like ongoing rate hikes may be necessary and will be on the table, if we need to do that sort of thing. Well, that's kind of gone. They changed the title a little bit, or changed the wording a little bit, to say that we're nearly there. We may be kind of done raising rates there. Now, they had to raise rates, in my opinion. Otherwise, they'd be sort of signaling that they're no longer following the data, and you don't want the Fed not following the data. That tells you these guys are making decisions whether they got up on the wrong side of the bed, got in a fight with their wife, or just felt like it for the day. We, of course, don't want that. And so that's where we stand at the moment. Now, stock market initially had a decent response. Let me go over here. This is going to mess my charts up, but initially markets say, yeah, we got what we want. Wait a minute, that's bad for the banks that are already struggling, and hold on a second, this is kind of tough. Then Jerome Powell comes out right in here. He's talking, taking questions, doing his thing. Over here. Comes out, does his thing, and he's saying, hey, this what we're doing here could slow down the economy. We understand that. And all the way down. In fact, even after hours, we're a little bit lower as well. So if you look at the data here of the market, that puts us back to all the way where we were at the close on March 14th. Now, a lot of people are going to look at this and say, this is the beginning of the pullback. Maybe. I would look at that and I would say, I wouldn't be concerned until we challenge this area down here. This is incredible strength. There's a lot of buying volume down here. Whether you believe in technical analysis or not, we can look at history. I'm going to zoom in just a little bit. Look at right there. See the gray lines in the background? Hopefully they show up for you. That's volume. And we know that's buying volume, not selling volume, because the market didn't go lower. So if the market had gone lower on higher volume, you'd have to assume the sellers outweighed the buyers. And oh my gosh, people got out of the way. They said they'd be willing to buy. And as it got close to their price, they took their order away and said, I want to buy down here. That didn't happen. As more and more people lowered the price that they wanted to sell at, there were buyers coming up saying, okay, we'll take it. You're stupid. We'll take that bet there. Ultimately, we'll see who's right. But so we know that in this little group here, this 4-day window, we have well above average volume. What's going to happen if the market comes down here and starts to push through, meaning there's no more buyers. The people that bought here said, I'm not interested. I don't want to buy this. I'm nervous now. Well, if we start breaking below here, that would be considered a failure. It would also be considered a very emotional point in the market, because right here, there's a lot of emotion that was optimistic. The U stresses, right? Now we would have just flat out stress, people worried and everything. And so it's very likely that these people, which even if a quarter of them in here, that's about this many people, if a quarter of these people said, shoot, I took a shot, I was wrong, I'm going to get out and find another place to get back in. If they did that, that's in addition to the sellers that are already here, that's enough pressure to push you through these lows and, presumably create a more decent pullback there. So the life of the strong tech stocks and cyclical names, that's a little bit difficult there. And I want to share something with you here. From an economic standpoint, we don't always do this, but from an economic standpoint, we have a little bit of a divergence going on here. What I did is I put the ISM manufacturing data in dark blue. Yeah, you could see it. So dark blue. We're manufacturing less. From a strictly widgets composition type sort of analysis, there is less and less being produced, meaning they don't see the demand for it. So they're making less Sea-Doos, they're making less furniture, they're making less cell phones. Well, this is US based, so they're making less stuff. However, over here, I did that fancy ratio chart that I usually do to show our cyclicals outperforming or our defensives outperforming. And then I took out the banks, because if we included banks in this, it'd be a hot mess, just a big volatile jibber jabber there. It looks like a heart monitor. So we said, okay, everything but the banks, because we get it. They're going through some stuff right now. They're doing their own thing. So let's take those out. What we have is a divergence between the cyclical stocks and manufacturing. Cyclical stocks trend with manufacturing. More stuff's being made, the more stuff's being sold, demand's there, everything's exciting. Those stocks that like to sell that kind of stuff, they should be doing really, really well. We have a divergence. We have cyclical stocks going up, which is not new to you if you've been watching the show. However, we have manufacturing saying, we don't see it. We're making less stuff, which means these stocks that are doing well now won't have the stuff to sell more of it, right? In a really elementary kind of a explanation way. Here's the thing. This data tends to trend with itself. So in a downward manufacturing environment, which we have right now, cyclical stocks get pulled in that direction. That's a bad sign for the stock market, and it's a bad sign for those types of stocks if you're in them. For example, when we have a divergence here, manufacturing is lower, did cyclical stocks say, no, we still have enough stuff. We've got all this stuff we can sell. These shoes, we're still going to sell them. It's fine. No, they eventually ran out of stuff, and cyclical stocks started to get weaker right here. So a downside divergence, meaning you have, to really make it simple, the blue line pulling lower, but the light blue line not pulling lower. Downside divergence is bad for the light blue line. Excuse me. Over here, it's bad for the light blue line. All in here, it's bad for the light blue line. You get what I'm saying there. Downside is not good for cyclical stocks. So essentially what happens is we come over here and we look at cyclical stocks here today, say consumer discretionary we'll use. They realize that too. They go, oh my gosh, the Fed's not doing anything to help. The economy's slowing. What are manufacturers going to do? Manufacturers are going to say, we see it, right? We did a whole class on this. I don't have the slide. Let me see if I can get to it real quick. We did a whole class on this where I went through every company's earnings. UPS, JP Morgan, Tesla, McDonald's, Bank of America, Citigroup. Not the best example because those are not necessarily manufacturers. But every one of them, I could just share it with you. Every one of them had quotes that said, we anticipate a recession and therefore we're planning for it. Now, this was a snapshot moment in time when these guys reported, but if we go through the manufacturers as well, you find the same thing. They go, hey, we know that the economy is going to start slowing down, and we're probably going to dial back our widget making, right? Makes perfect sense. And so companies are already preparing for this. Look at me being all organized and ready and stuff. So if you're saying, I want to be in cyclical stocks, you might be fighting an uphill battle there, which is kind of difficult, which means if you're in the top half of the S&P and saying, I'm going to participate in that, a little bit tough, you know? It's going a little bit tough there for you and could get a little bit worse. Anyways, so that was just me trying to take like some complex data and put it into a simple lesson there. Bottom line is downside spreads not good for cyclical stocks. And that's the environment we're living in. Yeah, you can have these great little moments where it looks like it's all good. The last 5 days, for example, oh, everything's fine. One little sign of weakness, and look at how fast that energy gets sucked out of consumer discretionary. Look how fast it gets sucked out of tech. Is that a failed breakout? Right? It looked great for a minute. And all of a sudden people say, wait a minute. That's not good for the economy. That means we might slow down a little bit more. Not like doom and gloom recession nonsense, but we might slow down. I think that'd be perfectly warranted. We all probably need to slow down just a little bit. Anyways, got a little sidetracked there. Let's go back on over here. So that's the S&P. We got the NASDAQ, of course. There you go. Sharing on the screen there. Potential failed breakout. The Dow down about 400 points, was down a little bit lower after hours. Very interesting there. Bonds actually moving lower. Bond yields moving lower on an increase in rates. That's the bond market also saying, we understand that the Fed will have no choice but to stop tightening from here. And if they do continue, maybe like a quarter point, one more time or something. But the bond market already knows this too. So yields are moving lower. Prices are going higher there. Maybe good news for bond investors. It's been a little bit of a tough run there. If you look over at oil, continuing to show a little bit of a rally. That's the only maybe kind of counter trend flash you got today. A little bit weird there, but that's being driven by what's going on in China. Totally disconnected from what we have over here. All right, I do want to point out regional banks. Of course, they had a little weak move there. A lot of the regional banks were, I think all of them were lower, actually. So a lot of that's basically out of the news. Actually, here's how much it's actually out of the news. You guys, not you that watch, right? I get it, but like your friends and stuff. How many of them are like, should I get out of my small bank and go to gold, precious metals, things like that? Okay, I'm going to talk about that later on Jazz After Dark, but realize that that's a news movement. That's a purely emotional decision, right? Because the stock market's been going up, but now you're worried now. Oh yeah, the bank stocks are down, but the stock market's going up. So you're worried there. That's purely just a news move. We can actually see that. If you take the Google searches here and compare the actual activity of searches to what is usual, dark blue is usual, light blue is what happened. Yeah, all right, a week and a half ago, oh, banks, ooh, scary, right? Something's going on. And then it starts to dwindle away. And now it's actually trending below average there. Total searches related to anything that has to do with withdrawals, safety, SVB bank, bank collapse, bank contagion, bank failure, all that stuff, way down here. In other words, that news cycle, it's kind of done and over with. One other thing you can look at, just so you know I'm not making this stuff up. One other thing you can look at, it's called the H8 report, H.8 if you want to look it up. It comes out from the Fed. Actually, Friday, the next one comes out. The Fed is the only person that can see, or the Fed is the only group that can see real-time flows of money through the banks. So if you go to the bank right now and you withdraw $10,000, they'll know right away. They see it in real time. It's fascinating. It's a whole thing. Very fascinating. And by the way, this is that whole thing where people think the Fed's trying to create their own dollar. Yes, they did explore that. They are looking at that. But the real reason they were doing it with JP Morgan is for things like this, so that you could see and access your money in real time. It's a whole separate thing. Anyways, so if we look at the last H8 report, we can't get the current one till Friday. Maybe we'll go over that next week if we see it. If we look at the last one, there's actually not money flowing out of banks anymore. So if I were the head of the Fed, I'd be like, okay, CNBC, Fox, CNN, what are you guys doing? We can actually see there's not money coming out of banks. Online banks, believe it or not, have gained a lot of extra traction here. Banks that people can't even visit to grab their money. Where would you put your money there if you're scared? We broke it down by category. This is not my data. This is their data there. $2,500 or less in savings actually saw a small inflow there. Credit unions, small inflow. The trouble stocks, those are those regional banks. You know how your town has a bank, and if you go to the next town, you see the bank, but if you go one more town over, you don't see the bank anymore? Those ones, that's what everybody's looking at. Those guys are having the troubles right now. But your local credit union, apparently not having any issues there. $10,000 money market accounts, they're seeing inflows of at least $10,000 in there. CDs, those have been popular lately. I get that there. Online banks, they're all seeing this increase. Nobody wants to commit to the long term. I understand that. But we're not seeing outflows. Notice there's nothing negative here. So we'll find out on Friday. We'll get the latest H8 report, and we'll see, did something change? But that covers up to, actually it's last night, shouldn't be the 22nd, it's up to last night. So money's not moving out. In other words, it was a kind of a media-driven frenzy there for a little bit when nothing was, a couple banks, like it was, and they had a real focus on who they were serving as their clients. So, yeah, kind of victims of their own success there, if you want to look at it. So basically, people have moved on from this, and that proves it. Not my opinion. I love that when I can share things that are not my opinion there. Very, very cool. Okay, so what do you do, basically? Let's go back to this here. What do you do in the markets here if you're an investor? If you're a trader, okay, this is, time to work, right? You're doing a lot of work out there because you're getting the volatility. You got to take advantage of it. I'm not usually talking to traders. I'm talking to investors, right? So what you do here is you realize that is your line in the sand. You are fine. The markets can chop around, do whatever. What did we just say at the beginning of last week? Expect the markets to chop around in a wide range. What's happened? They've chopped around in a wide range. So that's not me being magic. That's just the environment that we're in. This range is from here to here. That's it. It's become a lot tighter than I would have predicted. Anything below that range, you have a recipe for more media, more, oh my God, we're doing a special event after hours, 8 o'clock tonight. Jim Cramer will join you and talk about the fate of the stock market. I would do it too if I cared. Maybe people are scared, they want to watch, but that's not fair. You talk to people that are already looking for doom and gloom. Nonetheless, this is your range. That's what you do. You essentially use pullbacks and anticipate them to be buyable until proven otherwise. You have to do something. As an investor that wants to do all this, you have to have a game plan when the market goes up and down. Your game plan if the market goes up is, wow, I guess everybody was wrong today. The banks are recovering and blah, 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 right? I don't see that too much on the horizon. As you pull back, you say, okay, economy's slowing down. Is it the end of the world? No, we should slow down. Most people have anticipated that. In fact, they positioned last year, stock market fell 20%. Big difference there, right? Okay, let's go on over to some stocks in the news there. There we go. So Nike in the news, we talked about this yesterday. They beat on earnings and everything. Inventory, a slight issue there, but it was lower than expected. All in all, pretty good there. The weakness, the good in the States, I should say, weakness over in China. That's a weird one. China's not ramping up like they had anticipated. And I've mentioned that numerous times. That's what's weighing on oil and everything else. China was a miss. I think they missed by 2 or 3% over there. GameStop, what are you doing? What are you guys doing? Oh. Did you look at GameStop's earnings or did you read the headlines? I'm going to guess that everybody that participated in this, you read the headlines and you said, oh, short covering again. This thing's going back to $1,000 or $500 or whatever this kids were talking about there. No. They only have a few categories of business that they operate in: software, hardware, and collectibles. Software, missed. No, nobody's buying software there. Collectibles, no. People just go on eBay or Amazon or whatever. They're not, those are both misses. That was not spectacular. Hardware, and I can't say for sure, I don't know this, but hardware, that's where they beat. We're just upgrading our systems a little bit. Is there some new like PS10 or whatever it is coming out there? That's it. So this is a one-off event for GameStop. I hope you guys are prepared for that. Boeing gets some orders from Japan Airways, was it? Japan Airlines, a whole lot of 737 Maxes, right? After they said, we'll never buy from them again. I think they ordered like 20, 30, something like that. Good for them. Ollie's Bargain Outlet, in all fairness, we own it. We have owned it. It's been an underperformer for a while. It was our best performer here today. Happy to see that there. Ollie's Bargain Outlets comes out better than expected earnings. They raised their guidance. They said people are coming back to our stores. They're kind of a discount. It's a weird store if you ever go into it. We have a few down here. It's going well for them. Back above the 200-day moving average. It's woken up. And it woke up to lots of extra volume there, right? People that were short, maybe betting against it, not sure if they wanted to participate. They made their decisions today. So very good for Ollie's Bargain Outlet and our best performer here today. Hershey's. It was What is this? Look at Hershey's, just killing it, right? So Hershey's actually, they had a investor day coming up, and ahead of the investor day, they said, oh, we're good. Guidance is going to be just the same. We're not going to change anything. So come to our investor day and just eat chocolate. We're just going to tell you everything's good. So good for them. Easter's coming up or something. I don't know. They just keep doing really well. Jazz After Dark tonight. A little bit of tough love. A little bit of tough love. We're going to break it down with some data. Of course, I'm not going to just beat on you. But if you have someone that's making emotional decisions about their investments now of all times, now, we're going to beat you up a little bit. So come back at 7 for that, unless you just don't want that sort of thing. Maybe send the video to your friends. Hey, dummy, stop doing this, right? I'll take your questions if you have any, or at least I'll try anyways. Yeah, let's do that. Hershey's chocolate. Yeah, that is good. What was a thing I saw on like Instagram or something? Was it Jon Stewart? He was talking about the COVID virus and stuff, but at some point he's like, oh my gosh, there's been a flood of Hershey in Hershey's, Pennsylvania. I wonder who could have caused it. Agree or disagree, that was kind of funny. Kind of for being put on a spot too. I don't know much about Jon Stewart. I don't know politically who he is, what he does. I just saw the clip and I'm like, nah, it's funny. Yeah. Let's see here. Giovanni puts $70K into an online bank paying 4%. Any thoughts? You moved from Wells Fargo. Yeah. Wells Fargo is not my favorite bank there. And they've proven themselves to be less than scrupulous. But I don't know what online bank you're talking about, but that would be my biggest question. Yeah. Downside or upside from here? Made that clear. I don't know. It's a choppy range. That's really what I think is going to happen. It's just a choppy range. We mentioned it, I think it was 2 Mondays ago, where I said, you're going to have a day that looks great. You're going to have a day that looks bad, but ultimately we're just going to be right here, just whoop, doing our thing there. Most analysts, Goldman Sachs included, have a end of year target of 4,000. 4,000, isn't that interesting? So let's see. Where are we right now? This does not include after hours. 3936. Where's 4,000? Right here. They all basically anticipate the same thing. Up and down right in here somewhere. You guys hearing a dog whistle or something? You hear that? It's out there. Yeah. Let's see what we got. As a client, should we double our contributions when, oh, there it is, the market is pulling back or during volatility, or keep it weak? So personal preference, because you have to sleep at night and so do I. I like adding more when the markets are in a down bad mood, falling lower. Because I know you're going to have to deal with me for decades. I'm going to be here for a long time. I'm only 40 years old. So I know that I'm not retiring anytime soon. I want to buy as cheap as possible. I'm never going to guess the bottom. I'm okay with that. But I don't want to buy on the way up. I almost don't feel good about that. That's just me. I have that contrarian mindset. Market's falling. I get excited. I don't sleep. If 500 banks fail by next year or need bailout, then lower we go. I think that's an accurate statement. Yeah. I would agree with you on that one. Wells Fargo. I've heard Hells Fargo. Yeah. They've got some work to do to build back credibility. Yeah, Nomad's got it. Blood in the streets, go for it. And your benchmark for that, since everybody loves him, is Warren Buffett. When there's blood in the streets, that man's quiet as can be. He's not doing interviews. You don't see him in his car driving to McDonald's and they're filming it. And how cute, Warren Buffett went to McDonald's. No, he's in the office. They're making bets, right? Yeah. Synchrony Bank, there you go. Yeah, very popular. You think the shorts are using the news to beat up on banks and run traders off? I can buy, and you want to buy the camper. The camper thing I saw, I will get to that. But the number of shorts in banks, it gets more expensive now. So remember, brokerage firms can raise the margin requirements or the amount that they charge per stock. So it's a slightly more expensive, especially on the little tiny guys. But that could be true, yeah. What's the difference between a money market fund and a money market account? Risk differences. Almost exactly the same thing. Money market funds are just participating, most of them are participating in money market accounts. That's all it is. Yeah. Now, it's a different protection, by the way. SIPC, FDIC. Who needs online bank when Vanguard Money Market pays 4.5%? Yeah, some people do that too. They say you could have an account. It's popular with some of our clients now. You could have an account. You say, well, I don't want to take the money out because I know I want to invest it at some point. But for the moment, can I just put it in a money market fund? There's lots of them that pay all the way up to 6% these days. So not that you would want to be in it for a year, assuming you wanted to invest the money, but it's just a fast way to say, over here, I'm in a money market fund. Oh, the market fell. I'm interested. Take a quarter of it and put it in versus having to do deposits and things like that. Yeah. Thoughts on Schwab? I don't think the banking issues are theirs to worry about, but maybe you're missing something. They are partially. Schwab is a whole group of different companies now because of the money that they spent. Presumably the money that they spent has yet to become accretive. That's the fancy word there. And especially on like Thinkorswim and TD and things that they bought. So a little bit weaker stance for them compared to IBKR. Really, there's not a whole lot of other ones left. There's a lot of people saying that the SPY can go to 335. I would bet that for everyone that says that, there's the same amount of people saying we'll go to all-time highs. Remember, you found us because you were searching for something, and eventually YouTube said, you might like this guy, right? Because they want to show you what you want to see. That's how they make money. So if you start following people that believe in really, really, really big moves, black swan events in the market, the internet's going to keep showing you that stuff. And that goes for anything you search, so careful. Good idea to put your emergency fund into a money market account. It's become more popular because of the higher rates. If you're asking, like, is it a good idea because of the safety, the banks and things like that? Yeah, it's fine. You think it slows the Schwab TDA merger? Oh, no, that's happened. That's done. That's a closed deal. It might slow the integration maybe, but they've already kind of earmarked that money for that. So I don't think it slows their timeline. If it slows the economy down, then maybe they let go of some people and that slows their timeline down. But no, I wouldn't think so generally where we stand at the moment. AJ's going 3,500, man. He says, that's it. Okay. Now, are you making that bet? There's a difference between having an opinion and saying, I am shorting the market. I am long puts, maybe 350 puts or something. What you think? Went to that G fund at TSP about a month ago, continuing future investments. Well, then you're happy to see rates actually fall in here because that G fund would have been a little bit stressful for you for a little bit. Yeah. Remember, yields going lower means the G fund will go higher. What's happened? Yields have basically gone higher. So if that G fund hasn't really moved a lot for you, or some days it's up and down and things like that, don't beat yourself up. Yeah. You like TDA? Yeah, I like to use Thinkorswim. You want to know a fun story? About once a quarter, I say, hey, I'd like to open an account. I get rejected every time. They send me a letter in the mail saying, sorry, we just don't think something like you're a good fit or you're a client that we want to have. It feels a little bit bad. Plus, when we started Jazz, I went to Thinkorswim first and I was like, hey, I want to be an advisor and I want to use you guys as the custodian. And the guy literally, swear to everything, the guy said, call us when you grow up. So a little bit of a chip on my shoulder there, Yep. If your advisor's not losing hair, he's not working hard enough. It's true. If he doesn't look like he's aging, then what's he doing, man? Sitting at the spa all day? And good timing on their sale, right? Take that money and run. There's been a couple of those transactions lately where you're like, oh, good job. Good timing. Mm-hmm. Oh, man. Yep. I love it. All right. You get the gist of what happened today? If not, then we'll, of course, be doing this again tomorrow. Tomorrow, remember, is the changes in the S&P. No, they happened yesterday, sorry. S&P 500, 400, and 600, those changes took place already. Yeah. Okay. I'm going to wrap it up there. Hopefully hit the right button here. I will see you guys again tomorrow. But tonight, Jazz After Dark, you're going to get the grumpy version of me a little bit. So hope you're ready. Enjoy.